Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris Rapeseed, Winnipeg Canola, and Malaysian palm oil.
Hello and welcome. Now, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or any related items on these my charts. This was all my own original work, as I think you deserve to have that. So with that, Paris Rapeseed. We've had two patterns here, two completed patterns that have been the main influence on this market since as far back as summer. The first pattern is an overextension of the bright red neckline, currently at 455.5, of the May to August 2025 Head and Shoulders pattern. This is a less common Head and Shoulders continuation pattern. The bright red neckline also shows up in the second pattern. In this case, it acts as a lower trend line, together with the nearby bright green upper trend line, which is currently at 462.5, that together formed a shallow July to October descending wedge pattern. We had a break higher over this pattern 4 weeks ago, and a good break higher. And as I said 4 weeks ago, and I quote, "I feel obliged to lay out, if not targets yet, then potentials." Thus, a primary potential would be up in the 489.75 area, with a secondary, harder to reach potential up in the 502 area. Of course, if this becomes a false break on the upside, then I'll retire these potentials in a heartbeat. End of quote. 3 weeks ago, I solidified those potentials into targets, with target X, the primary, at 489.75, and target X1, the secondary, up at 502 even. Since late October, we have seen prices move up and away from the descending wedge pattern, but also get caught between the mauve medium moving average, which is below, currently at 475.5, as well as the gold long moving average, currently at 479.5, plus the dark blue neckline extension to the August to September 2024 reverse head and shoulders pattern, which is currently at 483. I said 2 weeks ago, and I quote, "Pushing above the gold long moving average, and especially the dark blue neckline extension, will be key to any attempt higher. However, if prices stabilize below the mauve medium moving average, then the pressure will be to try and push down to the bright green upper trend line." End of quote. Now these still stand, though one further key factor to consider happened at the end of October, in that we had a monthly key reversal up for October. However, this seems not to have affected or to be affecting the market by too much at this time, though I do note we are once again testing the dark blue neckline, this time supported and basing on the gold long moving average. Winnipeg Canola. The key recent pattern here had been the fairly obvious bright red late June to late October bear channel. 7 weeks ago, prices spiked down to the May 23 low at 611.10 within this bright red bear channel, but then bounced up from it there. Initially, not by far, as it seemed the pattern came to the market rather than the market moving to the pattern. But it did lead to prices testing and finally breaking upwards 3 weeks ago over the bright red upper bear channel line, as well as pushing up over the 2021 low at 629.5, plus the lesser Fibonacci line at 632.90, and then last week challenging and stabilizing over the bright green short medium moving average, which is currently at 637.10, before this week making a small gapping move higher over the significant combination of the June 21 low at 655.90 and a 50% Fibonacci line for the whole of 2025 at 655.70. Prices continued higher, but then, unsurprisingly, ran into trouble around the slowly declining mauve medium moving average, currently 659.90, and the extraordinarily flatlining long moving average, currently 663.5. Further above is what may be the significant dark blue April to August head and shoulders top neckline, which is currently at 679.90. Thus we ended up and out of the bear channel, and we almost, though not quite, given this week's action, seemed ready to form a small October to date bull channel. Okay, so 3 weeks ago I said of this move higher, and I quote, "This just now leaves us with potentials topside for the breakout of the bear channel. Now the following are potentials, not targets, as it's still too early for targets, but a primary potential will be up in the 680 3/4 area, with a secondary harder to reach potential up in the 720 1/2 area, and a tertiary, much harder to reach potential up in the 751.90 area. As I said, these are at the moment not targets for the pattern, just potentials, end of quote. Well, last week I decided to solidify them into targets, with a primary target X1 in the 680 3/4 area, and a secondary hard to reach target X2 up in the 720 1/2 area, and a tertiary, much harder to reach target X3 up in the 751.90 area. It is interesting to note that target X1 is just at and soon just underneath the dark blue neckline. That also target X2 is just under the neckline extension to the narrow October 23 to November 23 reverse head and shoulders pattern. And the final target X3, well, that's right on the high for 2025. Bursa Malaysia crude palm oil. To start with, as I've done for many months now, I look to the wide congestion area that's overhead between 44.08 to 45.59. We tried in mid-October to pierce it and failed, with prices punching down through the lower edge of this congestion as well as all the moving averages. Prices also dropped down through a wide congestion zone made up from the 38.2% Fibonacci line of the May 20 to March 22 move and the 50% Fibonacci line of May 23 to December 24 move. They're both at the same 42.74 level, along with the 38.2% Fibonacci line of the July 19 to March 22 move at 42.39, and finally the July 23 high at 41.89. The new recent overall pattern here is the dark blue mid-August to early October bearish Andrews pitchfork, for which the lower time, currently at 39.88, has in recent weeks been exceptional at showing the slowly declining support. And this week, the dark blue middle time, currently at 41.83, well, it's initially been good as an attractor on a closing basis, with those former supports now resistances up at 42.74, plus the gold long moving average capping the market yesterday and setting up today to be a possible day 3 in a 3-day bearish evening star pattern. Now, stepping back a bit to view the overall picture, we can look at the whole August to date action as a possible double or even a triple top. If that is the case, then as I said 3 weeks ago, and I quote, we have potential still available down to a primary target X in the 41.18 zone and a secondary hard to reach target X1 down in a 39.40 zone, end of quote. The primary potential and target was achieved last week, but it still leaves the secondary harder to achieve potential and target X1 still available at 39.40. Additionally, the whole mid-October today action could also be seen as a possible descending scallop pattern, which is like a reversed letter J. Or is it that way round? That way round. Down and then up. We've had the drop, then the rounding base over the last 2 weeks, and then today could be the last day in a 3-day bearish evening star pattern, though that is not yet determined. But if it is, then we would see a test of the base of the recent action in the 40-50 area, and we could then have potentials and even targets below. I'm not yet comfortable with this pattern to lay out targets or even potentials below, but I would like you to be aware of it just in case, especially after October's monthly key reversal down. Now, we do have a band of congestion below around the dark blue lower time between the February 2011 high at 39.53 and the lesser Fibonacci line at 40.26. However, to be honest, this is not that powerful a congestion, but it seems enough for now, hence the stalling ahead of target X1. There is one other feature which I would like to discuss, something I've already mentioned since June. This all came about because at the end of June, speaking about it in a presentation at the Biofuels International Conference and Expo in Brussels, Belgium, and I've also recently spoken about it in November at the 28th World Ethanol and Biofuels Conference in Brussels, it was and is to watch out for a key level from now until the end of the year, and that level is 35.99. I have always prefaced this by saying, and I quote, "I know this quite a way below the market, but still nevertheless it is important," end of quote. Well, we're a lot closer to that level highlighted on my daily chart in a black line box than we were in mid-October, and that is why it is important. You see, if prices push down below $35.99 before the end of this year, which even now seems far away, then we would have set up the conditions here in palm oil to make that rarest of patterns. An annual key reversal with all the implications such a huge long-term pattern may bring. Please watch out for this, as it is important, and I will bring you more details should we get down below there, even though I know, as we are today, still a few hundred ringgits above it. Please bear it in mind as we still have some time left of this year to go.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.